Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. It is cloud-free and washed out look here on the channel. No clouds, super sunny day here on the coast. Today, we're looking at the pumps and dumps and support regions and the massive volatility that is building. We're getting this big breakout imminent on Bitcoin. But today, let's look at S&P, NASDAQ, the Dixie, the US dollar, which is falling at the moment. It is almost directly on cue with what we had posted about on Twitter based on the news headlines. You know, if you've been following the channel, the regular viewers, which you should be if you've subscribed and bell notification icon, we focus a lot on the market sentiment and learning how to read the fear and the greed out in the markets to give us an extra edge on our trading and investing. So I want to look at that in just a little more detail with the Dixie and how that is building into a potential dump and pump for Bitcoin. So the dump on the Dixie, the pump on the BTC, the accumulation or consolidation that is building there for the next breakout that we're looking for over the next 1 to 7 or so days. So stay tuned, subscribe, bell notification icon, hit all, and of course, like the content up. All right, shout to our channel sponsors, Bybit, 0% fees on spot pairs. So yes, it is the shield for the exchanges. You don't need to get wrecked trading leverage. You can trade spot, and also BitGet if you can't use it. If you're in particular countries which can't use Bybit, you can potentially use BitGet over there. Also 0% trading fees. Now they're doing this at the moment because what we're seeing across the board is that volumes have dropped and exchanges are trying to bring in more volume to their particular exchange. What I do caution is find exchanges that you trust, that have potentially been through bear markets before and have high volume, high liquidity, good spreads. They are potentially running a good ship over there, like a tight ship, making profits. Exchanges need to make profits to keep your money safe. If they're not making money, then look at what happens to things like Voyager, Celsius, all those sort of apps that are just doing stupid things over there. So I know we don't like paying fees, but just look for exchanges, regardless of who you use, that are doing well in the bear markets as well. All right, so the links to that are in the video description if you want those 0% spot trading fees. All right, S&P right now got a new low overnight. We do have a lower close, and again, the lowest close that we've seen for quite some time. We have to stretch this all the way back to this period of November, December of 2020. So we are still grinding lower. I think what's happening is the market is testing this low and it's just not holding the way people would have liked, or at least investors would like. And eventually we'll probably get back to this macro support test of 3,500. So on the downside, we have 3,500. We have the level of the lows here at around 3,200. The 2,700 points is the macro level. This is the entire range from the GFC low, that's GFC in 2009, to the peak that we had in December, January of this year, December 2021, January this year. So we'll worry about that if the market ever gets there. But the main levels here that we're looking for, which have been on the chart, as you guys know, since this top came in December 2021, basically January 2022, 3,500 points. And these are the next significant levels here. You can see a peak in June, lows in September and October, and then away the market ran from that point. So they're the next levels around 3,200 points. We're not there yet. We're anticipating this sort of low. I still am in the mindset or the view that we are bouncing around the lows. If the lows are at 32, between 32 and 4,000, so be it. All right, but at least the extreme fear is still there, and going forward, the cycle is still intact for another leg up in the coming years. Same sort of deal for the NASDAQ, except it hasn't reached that new low yet, but overall, it is at a lower point than the S&P is. So that's why it's taking a little bit longer to break the June low than the S&P is. You can see the 50% using the same range from the C19 low to the current top. It is under that 50% level. So like we've looked at, probably going to look at this test of around 10,006, potentially down to 8,009. This is the levels we've been tracking and waiting for this entire bear run for the NASDAQ. As for the S&P, you can still see it's above that 50%. So in the macro view, it's still stronger. Tomorrow is Saturday for us here, but Friday afternoon for everyone else in the Northern Hemisphere, Europe backwards over to the US, time zone that is. And I'm going to cover some weekly close updates. So stick around for that on the channel. We got the metals, weekly closes on Bitcoin futures contracts, and then of course marrying that up with the indices, the S&P and the Nasdaq. So the indices are trying to do their best to hold the line, the double bottom line, whereas the Dixie, the US dollar, is going on a correction. The trend is still up. However, the news and the fear that you see across Twitter with massive accounts, it blows my mind, calling for the collapse of the Great British Pound, the euro, your currency is next, the world is sinking and the US dollar is taking everything. Yes, that has been the case, but it's been the case for, like we looked at last week, 69 weeks. The US dollar has been up. And at the time, at the bottoms, everyone was calling for the US dollar to collapse and Bitcoin had to take over and so on and so forth, right? It's always the same story time and time again. So this is how we start to work in the market sentiment, what people are thinking, feeling, saying out there in the market compared to what the money is actually doing. So we're trying to follow the money here on the chart. And we don't always get it right 100% of the time because no one's perfect and the charts can be very difficult at times. But more often than not, you get these extreme moves at the tops, extreme fear. This is what happened, right? That was that day. I posted this prior to that. You can see here, 27th. There is the peak. News headlines. This was the 27th, basically 2 to 3 days ago. And this was the extreme fear that came into the market about the pound sinking to nearly parity. Yes, the euro went further. But again, there it is there. 26th top, 27th top there as well. And look what happened. There's the turn, right? So the news basically called it again. Sure, it went a slight little bit higher, but if you got out near that top there on any other chart that you are trading, any other market, and you can get that close using your chart analysis and understanding the market sentiment, you're going to make it in the market. That's just clear and simple to me from my experience. We're now down 2.62%, 3.01. So that's this little number here. What we're looking for now is an overbalance. So you can see the downside here was also 1, 2, 3, about 4 bars there because this next bar was up. You can see 3.106, 2.8. So we're almost to an overbalance of the price, but we also need the time. All right. This is a little bit more of an advanced skill. So I encourage you to either check us out on TIA Premium. This is basically the education, or stick around on the channel, try and learn a little bit more. This is going to help identify market turns before the masses do. All right. So we're getting this collapse. Market trend is still up. The collapse is early days, not 100% confirmed yet, but at least a good start here. So Dixie, the dump, right? Where do we go from here? Well, let's look at Bitcoin on a macro scale. Bitcoin hasn't dumped and it hasn't pumped yet. So Bitcoin essentially has not dumped while the US dollar has been going up for this period. So going back to June, here it is. There's May, here's the June peaks, and the dollar has been going up, whereas Bitcoin has been holding its ground. And so now that the dollar is potentially coming down, it hasn't overbalanced yet. So we're looking for this big move here and also this move here. Bitcoin may, as it winds up and the volatility becomes less and less, we might get that breakout pump. All right, we're getting close to this bear market downtrend. We've hit it for the 4th time. 1, 2, they put in the trend. We had another one here, 3, and then 4. So eventually we got a break to this upside. My view overall hasn't changed. It's still in a downtrend. Therefore, I still have to respect the fact that the market trend is down. We'll probably see in a more longer term, possibly a break here of the 17.5, testing somewhere between 11,000 and 17,000. This is not new news. We've talked about this a lot, but in the short terms, things may just flip to the upside. Could be a break, could be a significant hold above this level. We don't know yet. I'm not claiming to know yet either, but we definitely have to be on the lookout, especially as the volatility decreases a lot. A volatility pump will eventually come. And then looking at the shorter term timeframes, there's a lot of info on the chart here. So let's just clean this up. This is the daily chart here for Bitcoin. Now to the upside, our levels that we're looking for, trap unless broken, the 20,700. So just to break it down nice and simply again, we can see a move to the upside. I don't want to get this too confusing. You've got the short term and the long term. The short term, I want to see a break above this zone right here. It's been on the chart for a long time, 20,700. A nice clean break above that level is going to get us set up for the next moves. And that could be the break that we're waiting for because the Dixie is coming down. So it's basically taking some pressure off Bitcoin at the moment. And that whole story leads in quite well to what we're seeing on the chart with the consolidation and the reduction in the volatility, which essentially has to lead to a big breakout one way or the other. That doesn't mean that the trend has now flipped in the macro sense, because we need a lot more confirmation for the macro. But for the short term, it definitely leads its way to that move. A break above 20,700, a move above, that could set us up quite nicely. So just cleaning that chart up so we can see what's going on here. That's the level. Okay, so the next level's further up, 23,000, so 22.8. But I'm really focused on this one right here. This is the Wyckoff bullish flip for me. This bar at the top of 23,200, that is going to be a good key level to hold, consolidate, to then break that 25,200. We're not there yet. Yes, we've got a lot of resistance to get through, but they're the bigger levels that I'm looking for the market to give me that next checklist item of the bear to the bull flip. The bear market downtrend is getting very close. We're starting to work our way up, but if we get a move up and then a move back under, it's not as good. It's not as good. You can see the breaks, people get excited, but we need the close above each of these levels to confirm the first step of that move towards the bull. Let's see what happens over the weekend. As for Ethereum, if Bitcoin does start to move its way up, at least in the short term, that is going to put a lot of pressure on ETH Bitcoin. This looks like it should be trending up. But what I've done here, just to try to remove my own bias when I'm doing my analysis, is I've inverted the scale. This is what you would see if you brought up ETH Bitcoin. It looks like it's on a downtrend. It's holding on to the 50% right now. You can see how beautiful these tools work. This is again 50%. 0.5 is at 0.067. So you can see how beautiful this tool has worked to hold up the ETH BTC market for now. I think this is going to give way and drop eventually, and this will probably happen if Bitcoin breaks above. And the Bitcoin break above might be a trap, might be consolidation above there, but it might happen because the Dixie is also moving. So you can start to see how we're bringing in all of the analysis to help us identify what we believe, what we think, what we can predict and forecast moving forward. So what I've done here then is just flip this scale, inverted it to try and remove my bias that I think it's going to go to the downside. So what would the chart look like if it was flipped? Would I still think the chart would go up? Because the other way, I think it's going to go down. But if I thought this chart would go down from this point, then maybe I need to go back and do some more analysis. So from this point, yes, it's getting held out at the 50%, but you've got a big strong move up. And I think it is trying its best to break above and at least get to that next level of around 5.9% of BTC's value. And if ETH BTC does drop, going back to this chart and we invert it back again, if it does drop and Bitcoin goes up, that doesn't mean that ETH USD will drop. It might just remain steady in this zone, holding above the 1300 level, maybe even come back up to test 1450, maybe a little higher. But the US dollar chart can still increase if Bitcoin goes up and ETH BTC goes down. So what does all that mean in a nutshell? Well, ETH USD looks like it's holding its ground and has the potential to go up from this point short term. ETH BTC looks like it wants to drop, but that's not going to affect ETH USD if Bitcoin USD also happens to break out to the upside as we start to see some of that weakness in the US dollar come through. That's what I'm seeing in the markets today. Stick around for tomorrow's video and also subscribe to our free newsletter. Link is in the top of the video description. Tomorrow's video, we're going to cover the weekly close of the traditional markets, metals, and of course, cryptocurrencies as well before we get through that weekend, which has typically been boring, and into the start of a new crypto week on Monday. I'll see you guys very soon on the channel. Like, subscribe, all the stuff down below. Until then, peace out.